Welcome back. Thanks so much for joining us on the InsurTech stage. We move on now to the Embedded Insurance Forum to discuss one of the most exciting and highly anticipated trends within the InsurTech sector. My guests for this panel are Elizabeth Jenkin, Chief Executive Officer at Nimbla, a digital risk assessment and insurance company that is disrupting the world of trade credit. Also, Dave Wechsler, investor at OMERS Ventures, whose InsurTech portfolio includes investments in well-known players such as Clearcover, Foresight, Join, and WeFox. We also have Nilay Doshi, VP Head of Insurance Consulting, North America at Coforge. Nilay works with CXOs of leading carriers, brokers, MGAs, and investors to help them with their growth, CX, innovation, and digital objectives. Finally, Chris Frankland, founder at InsurTech 360. He focuses on innovative solutions that redefine and elevate the customer experience in the insurance industry. Let's bring our panel on and say a big welcome to all of you. Hello, how are we all?
Great, thank you.
Good, thanks.
Hey,
Excellent.
Hi everyone.
It's a busy room, so we'll get straight on with it. There's no doubt that embedded finance is changing the way we buy insurance. So with that in mind, where do you think we'll be buying insurance in 20 years' time? Or will we even be buying insurance ourselves at all? Who can I kick that off with? Should we start that off with Chris?
Yeah, cheers. Thanks for having me on. Great to see everybody. Yeah, I mean, goodness me, that's looking quite far ahead into the future. I think in 20 years' time, obviously, the way we buy insurance, and I think even what insurance looks like, will be very different. I think it will be much more dynamic than perhaps it is now. We're here to talk about embedded insurance, so obviously, I think embedded will be the default way, perhaps, that we consume and buy most insurance. Something I'm quite passionate about, that I think we're seeing a trend emerge now, is kind of this peer-to-peer model to some extent. So if you think about Facebook groups, which has kind of ballooned to about 1.8 billion users this year, rewind 5 years ago, the number was probably around 300 to 400 million, right? So I think we're seeing this emergence of communities that will continue quite dramatically. And perhaps we might see a shift towards kind of this peer-to-peer model again, where risk is kind of pooled amongst communities. So just a couple of thoughts there.
Excellent, thank you. Nilay, what about you? If I can cut to you next, what do you think will be the future of insurance, and will we even be buying insurance ourselves in Chris said it's a long time into the future, but I'm sticking with it, 10 to 20 years time. What do you think?
Yeah, and I completely agree with Chris, right, in terms of the dynamicity of the market and how we'll end up purchasing insurance or how insurance will be interacted with in future. I mean, at the end of the day, insurance is all about risk management and risk mitigation, and whether it's now or in future, there will be a need for insurance, right? So the question really is whether are we going to be explicitly buying insurance, or is it going to be inherently included in sort of the products and services that are being offered, right? And I think the way the market's going, the way the technology is being evolved really quickly, I can easily see in the products and services space, insurance sort of inherently built into the capabilities, and you don't have to explicitly buy it. You may have the options of upgrading it, but you don't have to go and explicitly buy it, right? But there is also an aspect of personal liability, right? And to me, that inherently has a human aspect to it, and that's really, I can be altruistic in future, or I can be a fraudulent person in future, right? So to me, it's really, that's the bit that you'll always end up buying. So insurance is there to stay. Just the interaction model and how you actually purchase it might differ depending on the needs.
Elizabeth, do you have any thoughts to add on our engagement?
Yeah, I think there's possibly the sort of unconscious and the conscious sell around the insurance. We also have to remember it's a highly regulated product, so we don't always get to make the choice about how a customer does or doesn't buy the product. There probably needs to be the regulator talked about here, because they will want the customer to be very conscious of what they're buying, and they will want to know what the cost of that and what the cover is, and things like that. So I think the regulator will probably play quite a big part in however insurance is purchased over the next, I think somebody said 20 years, which is a terrifying timescale if we're moving as fast as we are. But as far as I can see with what I've known, what I've seen in the last 30 years, the regulator will definitely play a part in how we buy insurance, whether it's embedded or not.
Alex, if I can add too, I think, from a venture capital perspective, we may think about things a little bit differently. And I think for us, it's more than just insurance. It's really just the experience of buying products and services and what consumers expect over the long term. I think traditionally commerce has been very asynchronous. You buy a piece at a time because that was the way that we kind of built commerce systems. But as we move more and more to integrated environments where technology becomes very much part of like what people buy, I actually think a lot of this comes together. And if you look specifically at insurance, there were a lot of reasons why the insurance purchase was asynchronous, right? There's underwriting requirements, analysis, all kinds of data that was required. But I think as experiences become more integrated and buying a product becomes more part of a service, actually a lot of these kind of requirements in insurance all kind of come together. And while I do think there'll be regulatory oversight and a need for transparency and pricing and all that kind of stuff, in fact, I think people will look to buy an experience, which will probably have some component of insurance in them. And that's for both personal lines as well as commercial lines. So I think when you're talking like 20 years out, the experience of buying anything will be very different, and insurance, of course, will be very different in there as well.
And Dave, as an investor, you must see companies that are completely changing the way that not only we buy insurance, but the way that we interact with insurance organizations.
Definitely. I mean, it's an interesting time for investing in insurtech, of course, because it's a tumultuous market and it's a little scary and people want to see things that are working. So we kind of find ourselves juxtaposed against, hey, we want to see models that actually are evidence to be working, but at the same time, we want to think about a future. A little hypocritical, but that's the way venture capitalists can be sometimes. So, but what we're certainly seeing is indications, right? Like better underwriting data from actual usage of products or services. Better distribution techniques like, embedded. And I think most importantly, what we're going to find is pools of risk are created differently. And we're seeing a lot of that right now, where you can underwrite to smaller groups or underwrite to even one based on having new data sets. And that's where I think a lot of venture money will eventually wind up in. It's not, making insurance completely different. It's kind of using different data sets and different processes to actually perform what insurance does well, which is, cover for risk.
Yeah, Dave, I think you're absolutely right. I think there's a cultural shift that will go on around buying as well, because millennials are turning 40. They're quite used to a digital experience. They're quite used to that sort of package model. So, well, this is what we're banking on anyway. And the lens that we look through it is that they want to get something done. Yeah. And within that, insurance might play a part of it, but they don't want that to be a bump in the road. They don't want it to be annoying. They still want to have sort of choice and transparency on pricing and everything else, but they would rather have it all in one place rather than having to go to 6 different places. So from our point of view, they want to raise an invoice, they want to fund it, they want to insure it, they want to collect it, they want to claim if they can, and they want to do all that in one place. And why shouldn't they?
Absolutely.
And that is our job to do it. So in terms of buying it, I think they buy it as part of an overall need to do something rather than specifically going out to just buy the one piece of insurance that they need in order to allow everything else to happen.
Okay, excellent. So obviously, in terms of understanding what embedded insurance will do for the insurance industry, it's very easy to see how it improves the lives of consumers. You bring insurance to consumers rather than making consumers go to insurance. But what advantages are there to merchants of embedding financial services and embedding insurance into their websites and their apps? Who would like to explain us that one?
I'll have a go again. Sorry, Nilay.
Oh, that's okay.
So I think as somebody who spends a lot of time on the product side, kind of thinking about the future of insurance and the customer experience side, I think the most exciting thing for me is being able to own that complete customer journey and the customer experience, right? So when you think about the brands, the merchant brands, there's the opportunity to kind of embed that in your own customer journey and to own that experience, which I think is huge, right? So customer loyalty, when you think about potentially gamifying some of the insurance experience, there's a lot of control that you have when you're able to embed, whether it's through APIs or however you want to do it, but you just have much more control over that customer journey. So I think for me, that's probably the most exciting thing.
Yeah, and I was going to sort of answer in the same vein, right? It was essentially having the control of managing customer expectations and customer experience, right? Because again, I go back to the roots of insurance being risk management, and it's something that you don't want customers to experience. Ideally, the customer has a very seamless experience and never has to use their insurance, right? And the risk never rises. But the ability to sort of in the transaction, as you're servicing the client, to share with them, here are the inherent risks of these products, and well, either we will cover the risk because the insurance is embedded in our offering, or here's an option for you to buy insurance which will cover you for your risk. So it's really providing that transparency, setting the expectation right from the get-go, and then managing that expectation through the life cycle, right? And to Chris's point, owning that journey end to end, and making it your own brand, right? So if customer experience is top priority for your brand, then you're doing everything possible to make sure that they have the right insurance, the right coverages, and then in the offering, versus if it's just a commodity where if something goes wrong and you simply go and file a claim and get your $40, then it's a volume-based thing, right? So it's again owning your customer's experience.
Yeah, there's three really interesting examples that I'll run through really fast that I think kind of illustrate the value of that. One is Tesla, which everyone talks about. Tesla's, initial experience was, wow, it costs a lot to insure a Tesla. When there are accidents, they're pricey. But Tesla realized that actually underwriting against the driver's performance and actually being the provider of the product could, in fact, eventually result in not only savings, but a better experience. The next, an interesting situation recently, I forget the name of the watch manufacturer, but a luxury watch manufacturer announced more of a warranty product. But if your watch is ever stolen, we will replace it for you. This is an $80,000 US watch that if it's stolen and the police validate it, they will replace the watch free of charge. What's the thinking here? My experience is maybe some people are worried about wearing an $80,000 watch around, and we're going to alleviate that concern by actually, again, providing an experience. And then just yesterday, Sky Europe announced a homeowners product embedded in smart home technology, something that I had a chance to work on when I was actually at Comcast. And in fact, here we go. We start talking about consumers thinking about smart home technology, better protecting their home. Guess what? Home insurance is embedded in that experience. So now we're thinking about not only physical protection, but also monetary protection as well. Those are all experiences that I think create a much more enticing relationship with the vendor.
And I suppose in that sense, Elizabeth, what you're doing by utilizing embedded insurance is you are improving customer satisfaction, and therefore that is going to improve customer retention.
Yeah, exactly. Yeah, I think you're absolutely right. I think it should, to Dave's point, give you a competitive edge. It could, until everybody catches up, give you a competitive edge. That watchmaker, £80,000, we're going to give you for it, going to give you peace of mind on it, because insurance is very often about protecting the things that you really care about and you really love and you really cherish. They're getting rid of all of that for you, so you can confidently walk around in your £80,000 watch and not worry too much. So I think there is a competitive edge there. I think be able to collect data on their customers to cross-sell and upsell as well, depending on the type of organization it is. So, I mean, if you've only got one product, that might be a bit trickier. But if you've got a range of products, then definitely there's the opportunity to do that. You've got additional revenue coming in because you should be taking, nobody likes to talk about that, but there is that, slice of every transaction that should be coming your way. So yeah, it's covering that peace of mind, which if you're there first to the party, you may be able to make that sale to that consumer that somebody else may not.
Okay. And I suppose one thing that customers generally aren't satisfied with usually when it comes to insurance is pricing. One of the ways that it was put to me recently was that a consumer goes to an insurance organization to buy insurance. The insurance organization then scuttles behind a curtain, does all the maths, and then comes out with a price. And there's no transparency about how they've reached that price at all. So I think, Elizabeth, you touched upon it a little bit earlier. So I'll start with you. Do you think embedded insurance has the power to increase transparency around pricing, and must it?
For me, it must. And for us and for what we do. So I'll talk about TCT, Trade Creditech, Nimbla, and how we do it. So we've embedded ourselves in cloud accounting, and we suck in the accounting data, and then the customer is able to configure their own insurance. They're able to use sliders to decide how much they want risk they want to take, and various modules on the policy and things like that. So it's fully configurable by them. It's not an underwriter over here saying, hey, mister, you get to buy this, this, and this, and this, and aren't you lucky? They actually get to feel that they're in control of what they're purchasing. And then there's an emotional bond with that, believe it or not, in terms of, right, I've got the control here, not the underwriters, and I will configure it to my business, which I know really well. I know what my risk appetite is. I know my customers, and we're there to provide the framework and the insurance for them to do that. And as they're moving their sliders up and down, the price is toggling in the top left-hand side. I don't know how much more transparent you can get than that. So we are massive believers in transparency. We talked about customer experience earlier. We believe that changes the whole customer experience of their attitude to risk and their understanding of how much risk they are taking on and how much they are leaving on the table.
I think, by the way, there's another piece of transparency, which is just understanding total cost of ownership. And I actually think, because in a hard market like we're in many lines of business, people, both businesses, consumers and businesses, sometimes don't really appreciate what the true cost of owning something is. And I think as it moves more into the embedded channel, people now will have this opportunity to say, actually, I'm not just making a car payment or running my business at this expense. In fact, this is the overall cost to actually have the product or service that I need. And I actually think that will go a long way in helping people understand and be satisfied in their experience, because now they get, when they commit to something, really what they're committing to.
So I'll play a devil's advocate to this one, right? Because I think it's debatable whether you really get greater transparency in pricing, right? At the end of the day, if you think about carriers, their ulterior motive is to get as much profitable policies underwritten, and part of it is to go with some of these OEM partners and cars and sort of locking in your customer base, right? So with that in mind, you're really, compared to free market, where I would go and shop around and get a whole bunch of options and then and choose the one that best fits me. Here I have only one option, but the convenience of it, buying it at the point of sale or at the point of service, makes it more enticing to buy it. So I don't really think as much about the price and the breakdown and the comparison. I just go and buy it, right? So that's one aspect of it. I feel like it may actually become less transparent, where you simply don't have options. You're buying it, right? And when it comes to embedded insurance, wherein the insurance is actually truly just offered as a service, as part of your service offering, there you may not even know sort of the limitations and the coverages, right? You just, I have coverage and I have peace of mind. But when a claim does happen, then you could potentially figure out, okay, here are the limits and here are the liabilities, right? So I think it's debatable whether you truly get full transparency, but but I can see where you do have the ability to customize, and as long as you're offering that ability to customize, then at least you have the transparency in your current offering.
Yeah, and I think, just to jump in, this is all based on their data and their behavior. So it is quite idiosyncratic. It's not them filling in a very generic form and then some kind of matrix underwriting coming in on it. It is more sophisticated than that. So we are looking at very, very granular information on that. There's always a base cost for insurance, but then, obviously the toggles go up and down depending on what behaviors we've seen, 2 years previous to them coming in for it. But I think you make a really good point about competition. And what do the carriers do at the back around, are there panels? Is there just choice of one, etc.? And that, as embedded insurance becomes more of a day-to-day thing, that fight to be in the mix, I think, will be a really interesting one, because brand might not be the thing that sells anymore in terms of insurance, because that's going to be more invisible. Yeah. It's you could argue brand might get slightly eroded because they're looking at the product more than the brand as well.
I think too, for the next couple of years, the regulatory climate certainly protects against that, at least in the United States, where if we're talking about personal lines, most products are filed, and the two highest costs really are underwriting and acquisition of the customer. If in an embedded environment, somebody's saving a lot of money on acquisition costs, most likely in underwriting costs, the likelihood of the price dropping from that vendor is pretty high. And more importantly, the consumer should always have opportunities to shop for alternative products, just because that's what a healthy regulatory climate would do, at least in the next few years. But it is a convenience factor, to your point. And if you're buying a product at a checkout line and you're offered insurance, you may know in the back of your mind, I could probably get a better rate if I go shop on this, but I'd rather just have the peace of mind as I make the purchase that it's here, and it may not be the best price. And that's a convenience. And I think that, consumers should have that option if they want it. Same with businesses as well.
Yeah.
Okay. One thing I would say, Alex, just very quickly, is that I think what's exciting about the transparency and perhaps the obviety as well is, as we do start to see more embedded customer experiences within the merchant platforms. So take travel, for example, perhaps a vertical where there's been very little transparency, and often people buy the wrong product and don't have the right coverage for the location that they're visiting. So you think about customer education and being able to embed more dynamic and accurate pricing around, say, a travel or a vacation package. I think there's a lot of opportunity there to make sure people are sold the right product for their specific needs.
Okay, excellent. So if I'm reading the room correctly, I think we've got three proponents of embedded insurance improving the transparency of pricing, and Nilay as the devil's advocate there. So thank you very much indeed for that. I'm going to bring things back around to that watch example, because I really like it, even though I'm struggling to get my head around the thought of an $80,000 watch.
That's US, not pounds, US dollars.
About the same in the UK now.
Yeah, exactly. It's worth less. So in that instance, you have the watchmaker trying to sell their luxury products to customers. Behind the scenes, that insurance proposition is being underwritten. Do you think then that the future of embedded insurance kind of puts an end to B2C insurance completely? Because in that example, it's all a B2B offering.
I mean, I'll start since I brought the example up. I don't think it puts an end to anything. I just think it creates a new opportunity for the vendor to have a different experience, whether it's done via partnership, via done, themselves, they're using their own balance sheet to cover the risk, whatever it might be. But I think what we're seeing in that example, and by the way, these have been gimmicks in the past, and there's a whole debate I had on LinkedIn, is this a gimmick yet again? I think what we're seeing is a market thinking about removing some decisions to create a better experience. And again, in this particular situation, I think some degree of their prospective customers say, man, I'm worried about walking around with a watch of that value on my wrist. And by alleviating that concern, by creating that peace of mind in an offering, not just a physical product that I sell you, but actually a service, for lack of a better word, I think you've created a new experience. I don't think it removes anybody from the market. I don't think it changes the way insurance works. But what I do think it does is it sets a new bar for the consumer in this case to say, wow, I'm buying an experience, not a one-off product. And that is where I think everything is moving as we go further and further out in the timeline. There may be more material impacts on the insurance market as we get out 10, 20 years, but ultimately these will probably be partnerships between carriers and consumer products companies and business service companies and all this kind of stuff.
Okay, Nilay, you're nodding along to that. Do you agree with Dave?
No, I completely agree, right? And I think this is essentially, if you think where organizations are with where the technology is today, there's really a possibility for organizations or carriers, I should say, to start offering sort of micro products, micro coverages, right? Which are essentially, for a lack of a better term, straight through processing, right? You're doing automated underwriting, providing a price, and able to sort of rate, quote, and bind all without human interference, and in products and sort of coverages of that sort, they are primed for sort of embedded insurance, right? You can offer them through all of your partner channels, and give a service to the customer that you're removing yourself out of it, allowing the actual business to own the complete customer experience. Now that does have an impact on insurance and insurance organizations and their business model, but that's something that organizations will then have to manage and work through.
Chris, do you think that the future of insurance involves less direct to consumer?
I mean, I think Nilay kind of hit the nail on the head. I mean, I think straight through processing, there are many insurtechs kind of emerging where, if you're able to have full control over the tech stack and the data, and have much greater visibility into the customer and their risk profile and what their needs are, it kind of opens up a whole brand new world of what that insurance experience looks like. So whether that's dynamic, micro, whatever it might be, I just think there's probably going to be a more ongoing dynamic experience where risk is constantly monitored and measured and priced, and perhaps that's where the future will be there.
I think there's we talk a lot about customer experience, and we're also talking a lot about point of sale. The insurance experience is actually a lot further along the line when you get to a claim. And I think it's a dangerous place to assume that as long as we give them the warm fuzzy experience at the beginning, then everything's going to be okay and they're going to come back for more, because it's actually, this bit needs to be frictionless as possible, and payment too. So I think we just need to be a little bit wary of getting too excited about embedded insurance, because I do think that the front end is looking really good. I think that there's some fantastic experiences out there for consumers and for some businesses, but unless the whole experience is good, embedded insurance will get a bad name for itself.
Actually, but that's actually, I bring up the watch example, but the Tesla and the smart home one, I think, are to that point, right? Like theoretically, the provider then should provide a better experience with first notice of loss and being able to pay a claim faster and all that. But point well taken. Like, this should not be about selling more insurance. It should really be about providing a better insurance experience overall to the customer.
And I think
in one of our systems, we actually alert them when something becomes insolvent. We probably tell them before they know, and then they can go straight through to the claim. So it's that experience is kind of helping them to make their claim, to mitigate their risk. All the data is there, etc. The claims process should be reasonably straightforward. So I think that's where I would love to see more and more embedded insurance go, is to make that the end to end, not just can we get them on the hook at the beginning. And
I think, Elizabeth, that's absolutely correct, right? I think right now, if you look at the embedded insurance marketplace, almost everyone is extremely focused on sort of the front bit around the sales cycle, but the claims process still goes back to the carrier, and you go to the normal claims process, right?
Yeah.
That may or may not align with the customer's brand value proposition and how they treat their customers, right? If my lost watch claim is going to take me 8 months to get my money back, that's not really the experience $80,000 watch carrier wants, right? So to that aspect, I think organizations now need to start thinking about that truly end to end, and how that claims process is also like essentially every touch point, right? Who is the owner of the touch point and who's the owner of the customer journey needs to shift a bit more.
Yeah, agreed.
Okay, thank you very much. So I'm probably not going to ask Dave this question because I feel like he's already answered it. But are there any future use cases for embedded insurance that you've noticed or that you've thought about that could become bigger that we're not really fully realizing as of yet? Unfortunately, Elizabeth, I'm going to throw you into the fire on that one.
No, because I was pulling a face in that I was hoping you wouldn't ask me this one, because I mean, I think it comes back to the customer. Right? Let's think about what the customer wants. And the customer usually wants to go to one place and be able to do as much as possible in one place, and not have the friction of going elsewhere. So for me, the cases going forward must always be, what does the customer want to do, and how do we get involved in that bit that the customer is happy doing? So for us, it's their zero cloud accounting or their QuickBooks or whatever it might be. They will be in that all day long running their business. So we should be in that bit because that is frictionless for them, seamless, easy. The next stage would be they can fund everything through it. They can collect, they can claim, they can, so everything is done in one place. I was thinking about various ways that you can do it, about buying houses, about buying cars, about buying computers, all of those things that we buy day to day, and just how insurance would just be part of that experience. But I know I'm not being ambitious enough in my thinking, and that's annoying for me, but that's not what I do necessarily. I've got brilliant people who do that for within the organization. So I'm sure you've all got way better ideas than me about where this might go in the future.
So I, as you were mentioning earlier as well about, having a single place, always being able to do things in a single place, right? My sort of thoughts went immediately into, hey, my life is on the road all the time. I'm traveling full time, for work, for pleasure, whatever it is, right? And we have kids, activities. What I want is Life 360 coverage, right? I don't want to go to 5 different insurance carriers, one for health insurance, one for my warranty for home products and home insurance and auto insurance. Can I get a Life 360 and, just in one place? If an event happens, I file a claim and pay my deductible and they take care of it, right? I want that peace of mind. So, to me, futuristic, given that we live in a connected world, everybody has access to pretty much all of our data, if not, freely, but with permission. All our data is digital. There should be organizations that can sort of aggregate everything and bring something and give me an offering where I just deal with them and not with 50 different parties.
Nilay, we're actually building something similar to that at the moment. So
sign me up. I'll be a test client.
I'll just throw out there, I think, when you think about the future of smart cities and connected buildings and IoT, coming back to that 10 or 20 year example, I think we'll obviously start to see much more connectivity in those areas. And I think along with that, different levels of embedded finance and the ability to automate and streamline some of those insurance experiences. So we are seeing quite a lot of that already, with different home devices and so forth. But I think the more connected we are, the more we'll see those seamless customer journeys.
And I suppose as we see more electrification on our roads, more autonomy at work, at home, we'll see possibly even new lines of insurance pop up. Nilay, I think you just invented a new line called Everything Insurance. Insure my whole life. Dave,
I've been in rooms in insurance companies where they've talked about that. They have talked about that, but there's a reason it hasn't arrived yet. But I'm sure it should be on its way. You're right.
Dave, did you want to come back in on that? Do you have any other £80,000 examples for us?
Well, I'll just add, and I'm the worst of it all. We keep talking about personal lines, but actually what Elizabeth's working on, I think, with SME space is actually very interesting. I think the driver of small business and growth is the potential to protect against risk. So many people have great ideas, want to start businesses, but the fact in today's litigious society, there's a lot of risk in being an entrepreneur or a business owner. And I actually think we're going to see a lot of new use cases in the business world as well. So the examples that I bring up are very consumer oriented, but I don't think it can be understated the potential for changing there as well. Everything from product liability to, transportation, commercial insurance. It's just so interesting to me to think about how tech is changing all of this. And I think embedded is going to be, first and foremost in that kind of revolution.
Okay. We've spoken mostly so far about embedded insurance as a proposition for consumers. So perhaps that's a good opportunity for us to gauge your thoughts on how big the market will be for B2B embedded insurance offered to other businesses. Would anybody like to offer their thoughts on how they see that?
I think it'll be as large as the business insurance market is. I think you're expanding the TAM with the concept of embedded, but really that's probably a longer term proposition. It's really kind of just a new distribution, a new servicing kind of approach for now. But as new products and services come out to market because of the potential to embed, I do think that will expand the overall TAM. But today, I think it's much more just about, better distribution, better servicing, better enablement.
And I think in today's point in the sort of the small business and mid business market, there is tremendous amount of opportunity and potential there for B2B, right? I mean, large organizations are complex, are hairy, so I can understand there's a lot more manual intervention, but on the small businesses, it's getting to a point where it's as close to sort of the profile of personal insurance. So having that automation, having that exposure, and having the holistic view is certainly possible today.
Okay, excellent. So we've spoken already about how the claims experience doesn't really work for customers. Do you think that there are still technical pieces that we have to get right in order to make embedded insurance ubiquitous? Chris, perhaps I could start with you.
Yeah, lots, lots of pieces. I think something I've been working with and talking about for probably 15 years. APIs, right? So I mean, you go back to I get a bit technical, but SOAP. I mean, we started doing this 15 years ago, and right now we're at the point where I think we have RESTful APIs. We have the ability to integrate and connect platforms and systems far more easily than we could 15 years ago. We have cloud computing, vast options available in the cloud space to do things very quickly. So I think from a technical point of view, cloud API, there are others, right? I mean, probably payments, blockchain, and I'll leave some for everybody else. But so I think there are lots of pieces to that puzzle that you need to get right. And ultimately, it really is also still down to the customer journey, and kind of working from the customer perspective, and then trying to figure out what piece of technology do I need to fill that need.
Yeah, in a utopian world, right? Everyone's on the same stack, everyone's on the same technology. Communicating between each other becomes easy. Transacting between organizations become easy, right? But that's not the case. So I think more so now than ever, it becomes important that organizations invest in sort of their tech stack, their architecture, to make sure that you have the sort of the right digital infrastructure, you have the right services-oriented architecture, you have a modular architecture, right? Because you don't want everything to be, give me one service that has like 50,000 elements. You want to do these microtransactions so that you have the flexibility of orchestrating your own workflows, your own experience. So like, I mean, this may sound sound easy, and it's sort of software principles 101, but it has to be done at scale and consistently in organizations with sort of some of the newer technologies that make it easy to communicate and have a consistent approach to everything.
And I think even more fundamentally, it's just thinking about the long-term experience that you want your customer to have. I'll give another example. I recently purchased a new Jeep, and the Jeep has an app, and the app not only tells me where the car is at all times, but also tells me diagnostics on the car at all times. And I think about that. It actually even runs a monthly report giving me an update on how the car is doing. And I think about that as an experience and the opportunity to embed some kind of coverages in there. It's really intriguing to think about products, not just as a one-time purchase or services as a one-time purchase, but that ongoing relationship with the customer. I think you have to kind of think about what you want that experience to be for the lifetime of that customer relationship, and then think about architecting the technology, which to everyone's point, there's still a lot of architecting and building to do. But you have to have that vision, I think, up front. And going back to the watch thing, maybe just saying, well, a police report validating it is not a great customer experience. Maybe it should have tracking in it. Maybe it should have some kind of, validation in it. I'm not sure what it should be, but the moral of the story is that might be just scratching the surface of what a real, experience looks like long term.
Okay, and Elizabeth, what about yourself? Do you think there are still stumbling blocks when it comes to embedded insurance?
Yeah, I mean, if we are looking at the whole customer experience, we're involving insurance companies in that, and one of the things that we find challenging is the digital adoption on that side, and sometimes the quality of the people that we're trying to talk to around getting that right, and the speed of it. So we are very modular. We've got what we call Lego blocks in terms of the way we build things. So you can have one Lego block, or you can have number 1, number 17, and number 42. We don't mind, and we just put them in a stack, and then you can interact with them as much or as little as you like. But there's definitely there's the consumer or the business, and then there's the insurer, and the tech piece in the middle is having to figure out the best way to interact with the consumer and make that the best experience ever, and also make that sort of speed and frictionless with the insurer in terms of validating a claim, getting the claim paid, etc., and making that as good an experience, if not better. Because if people get their claims paid well, everything else happens really well at the front, and word of mouth, and they talk to their friends, oh, I had this great experience, and and it becomes a little bit of a snowball effect. But unless we are able to digitally adopt within the insurers better than we do at the moment, and some are fantastic at it, and some are still on a learning journey. But if we want that competition that you were talking about, Nilay, they all need to speed up on that, because otherwise they're not going to be sort of front when we're doling out the capacity, when we're saying, right, who do we want to partner with on this? We're going to want to partner with the most digitally agile ones, because we're going to know that gives the best customer experience, regardless of sort of size and scale.
Yeah, I chuckled a little bit when you used the word Lego, because I was talking to customers recently, and they very very proudly went, oh, our organization's full of Lego blocks, and I had actually just completed an assessment for them of their tech assessment, and I'm like, it's more like Jenga, but yeah.
Okay,
I'll use that tomorrow.
Yeah. We are almost running out of time. I do just want to bring in one comment from the chat. One of our viewers has said, looking for the ability to have all your insurance needs taken care of by one touch point. Are we back to the virtual version of your neighborhood agent? I don't know if anybody would like to volunteer to have the final word on that. Are we making insurance more personal and more intimate and less multinational with this approach?
Maybe that's the irony. I mean, maybe I can't speak to it. I haven't thought about it that way, but maybe that is the irony, which it becomes extremely personalized and a product of one, and maybe that makes it very, intimate with the customer. Good observation.
Okay. Yeah.
History repeating itself in a sense. Okay, thank you to all of you. That was a really interesting discussion. We do have to cut to a quick break now, and then our final keynote of FinTech Live New York will follow. Thank you very much. Do stay with us.